Vertiv Holdings VRT Beginner's Guide. If you have ever wondered what actually keeps the AI revolution running, not the chips, not the software, but the boring stuff that keeps the lights on inside a data center, this is the company. Vertiv makes the power and cooling systems that sit underneath every rack of AI servers, and over the last 5 years it has gone from a sleepy industrial supplier to one of the most important companies in the AI build-out. We are going to spend the next few minutes on the business, what they sell, who they compete with, and why it has grown so fast. This is educational only, not investment advice. So, what does VRT actually do? Vertiv basically sells the plumbing of a data center, the power and the cooling. Think of it this way. When a company like Microsoft or Amazon or Meta builds a giant warehouse full of AI servers, those servers eat enormous amounts of electricity and they get extremely hot. Vertiv is the company that makes the gear that delivers clean, reliable power into the racks and then pulls all that heat back out. Their product range falls into 4 big buckets. First, power management. This includes UPS systems, which stands for uninterruptible power supply, basically big industrial batteries that keep servers running for the few seconds it takes a backup generator to kick on if the grid hiccups. Plus switchgear and busway, which are the electrical highways that move power around inside the building. Second, thermal management, precision cooling for traditional servers, plus liquid cooling, which is the newer technology where coolant runs directly across the chips, because the latest AI chips run so hot that fans alone cannot keep up. Third, IT infrastructure, the racks and enclosures the servers actually sit in. And fourth, integrated solutions like OneCore and SmartRun, which are pre-engineered modules where Vertiv ships the power, cooling, and racks already assembled and tested as one big building block. So a hyperscaler can drop it in and turn it on instead of stitching parts together on site. Geographically, the business is anchored in the Americas, which is about 68% of revenue and was growing organically at 44% in the most recent quarter, with Asia-Pacific around 19% and Europe, the Middle East, and Africa around 12%. The customer base is exactly who you would expect, the hyperscalers, which is the industry term for the giant cloud computing companies like Amazon Web Services, Google Cloud, Microsoft Azure, and Meta. Plus colocation providers like Equinix and Digital Realty, who run shared data centers where many companies rent space, plus a newer category called neoclouds, which are cloud companies built specifically to host AI workloads. So who does VRT compete with, and how does it win? Vertiv has what analysts call a narrow moat. Moat just means competitive advantage, the thing that keeps competitors from catching up. The 2 biggest competitors are Schneider Electric, a huge French electrical equipment company, and Eaton, an American industrial conglomerate. There are also smaller rivals like Legrand, plus Huawei and Delta Electronics in Asia. So the first thing to understand is that Vertiv does not have a magic monopoly. Schneider and Eaton both sell comparable individual products. Where Vertiv wins is in 3 places. First, switching costs are extremely high once you are inside a data center. The industry estimates that downtime costs $10,000 or more per minute, so once an operator has chosen Vertiv gear for a site, the risk of swapping in someone else's equipment mid-deployment is just too painful to consider. Vertiv also runs a growing services business that becomes stickier the longer the gear is installed, and a recent acquisition called PurgeRite strengthened their liquid cooling service capabilities. Second, scale and integrated solutions. In a market where every hyperscaler is fighting for capacity, the company that can ship complete, pre-engineered systems wins, and Vertiv has been investing heavily, with capacity expanding across multiple sites globally. An 800-volt DC power program coming in the second half of 2026, and acquisitions like ThermoKey adding dry cooler technology and BMarco adding structural fabrication. Third, Vertiv is what they call silicon agnostic. That just means it does not matter which AI chip vendor wins, NVIDIA, AMD, or a custom chip from a hyperscaler, because all of them need power and cooling, and Vertiv sells to whoever is building. They also manufacture locally across geographies, which insulates them from trade tensions and tariffs. What are the key drivers for the business over the past 5 years? There are basically 3 forces that have driven this business over the last 5 years. The first and most important is the AI data center supercycle. Building out the infrastructure for AI is one of the largest construction booms in modern history, and Vertiv is sitting right at the bottom of that wave. In the most recent quarter, organic revenue, which means revenue growth stripping out the effect of acquisitions and currency moves, was 23%, with the Americas at 44%. The company's order pipeline is described by management as robust and broad-based across both technologies and regions. For full year 2026, they are guided to 29 to 31% organic growth, and they are spending substantially more on factory capacity than the year before just to keep up. The second force is pricing power and operational discipline. Because demand is outrunning supply, Vertiv has been able to raise prices faster than its costs have risen, even after factoring in tariffs. Their adjusted operating margin is basically the percentage of every revenue dollar that turns into profit before taxes and interest. Went from the mid-teens a few years ago to 20.8% in the most recent quarter, with full-year guidance of 23.3%. That is a meaningful expansion, and it shows the business is getting more profitable as it grows, not less. The third force is the shift toward integrated solutions. Instead of selling individual UPS units and cooling boxes one at a time, Vertiv is increasingly selling pre-engineered converged systems like OneCore and SmartRun, where power, cooling, and IT infrastructure all ship together. This drives larger deal sizes and locks customers into the Vertiv platform earlier in the design process. The CEO, Giordano Albertazzi, has described this shift as fundamentally changing how the industry works, and importantly, these bigger integrated deals are not coming at lower margins, they preserve or even improve profitability. To wrap up, so in one sentence, here is what Vertiv is: the company that builds the power and cooling guts of the data centers where the AI revolution lives, selling to hyperscalers and colocation providers around the world, with the Americas region currently the engine. As a learner watching this company, the 2 things to keep an eye on are how the European business recovers in the second half of 2026, which management is expecting, and whether liquid cooling adoption accelerates as AI chips keep getting hotter, because that is where Vertiv's newer products and acquisitions are aimed. This has been an educational walkthrough of the business, not investment advice. Always do your own research before making any financial decisions.